Can you accept a little pain now for a lot of gain later? So we're pretty sure interest rates are going to go up one or two more times before the end of 2022. Bank of Canada still has 2 announcements left, one this month and one in December. What do? Do you take the variable or the fixed? This is the age-old question in mortgages. Well, every borrower is different, but I want to present one strategy that a lot of us in the mortgage world like and are talking about, and it can be a great strategy for some people. Not for everybody, but if you're someone who can take a little risk in the beginning for potentially big gains later, this is what it looks like. We're pretty sure we're heading into a recession. This is what all the economists are starting to, coalesce around in terms of opinion about what's happening in the Canadian economy. If you live in Alberta, great place to be. No secret. I keep saying this over and over, but honestly, for those of us living in Alberta, we may be poised to skate through a recession with a whole lot less pain than everybody else. So that includes in real estate. I had someone ask me today, well, Karri, should I wait to buy a house? What if I'm buying at the top? In Lethbridge, at least, where I've been for 10 years and where I sold real estate for 10 years, house prices don't fluctuate a whole lot. And in fact, it's a super safe place to put your money, right? You always got to look at the local economy. We have a very stable local economy. And even somewhere like Calgary, which is much more dependent on commodity prices, they just did not have the crazy real estate fever that happened out in the GTA, Vancouver, Lower Mainland. So it's still super affordable to be in Alberta. We have a strong economy here, especially southern Alberta, especially up in Edmonton. We have lots of government sector jobs. Super stable economy. So the right time to buy a house is when it fits your life and fits your finances. So back to the mortgage question, variable or fixed. The strategy is you front load your risk. You front load your risk. And again, this isn't right for everyone. It depends on your cash position, but ride out the variable right now. Watch your payments go up a little bit over the next number of months. But if we go into a recession, what's going to happen to interest rates? There's a pretty good chance they're going to plateau and maybe even start coming back down. If they start coming back down, would you rather be on a variable or a fixed? I'd rather be on the variable and ride those rates down. If you lock into a fixed today, you are locking in potentially close to the top of the rate cycle. You're locking in when rates are getting high. And then if rates start to come down within a year or two, you're locked into a high rate that's very hard to get out of without very steep payout penalties. And your friends who are on the variable will get the last laugh because they're riding the rates down and they're watching their monthly payments go down. Remember, over the long run, variable rates outperform fixed rates in terms of consumer cost, interest costs. So again, not for everyone. It really depends on how much variability, literally, you can stand in your monthly household budget, which is admittedly really stretched for a lot of people right now because of inflation. So if you can handle it, and really, sometimes you got to talk this through with your mortgage broker, hint, hint. You got to talk it through and think about what you want over the long run, what your current financial position is. Can you eat the frog now for some gain later? If you have any questions at all about how to choose the best mortgage strategy for you, just call or text 403-382-7335 or look me up at karriflatla.com. Remember to like this post, please, and subscribe to my channels here at Facebook and YouTube. In the meantime, have an awesome weekend, and we'll see you for next Friday Fire. Take care.